Have you ever stopped to think about the hidden science behind the smells and tastes in your everyday life? You know, that perfect scent in your laundry detergent, or maybe the flavor in a snack you love?
It's fascinating stuff.
It really is. And today we're taking a deep dive into exactly that. We're pulling back the curtain on an Indian company called Sacheerome. They're kind of a quiet powerhouse crafting these very sensory experiences.
Hmm.
So our mission for you, our listener, is to cut through a pretty dense legal document. It's called a draft red herring prospectus to pull out the vital insights about Sacheerome's big move.
Hmm.
They're planning to go public.
Yeah.
Think of this as your, let's say, shortcut to understanding what goes into a company's very first public offering.
And that's a really crucial point
Yeah.
because this document, the Draft Red Herring Prospectus, or DRHP as it's known,
Hmm.
it isn't just any old paperwork. It's the preliminary legal blueprint a company files when it wants to do an initial public offering, an IPO. It's designed for, well, complete transparency. Lays out everything, their business model, their financials, and really importantly, a whole list of potential risks.
So it's the go-to source.
Absolutely. For anyone thinking about investing, this document is basically the foundation for making an informed choice.
Okay, let's unpack this then. We're constantly interacting with products that will use what Sacheerome makes. So what exactly do they do, and why should we care about these things they create?
Right, so Sacheerome's core business, it's the creation and manufacturing of both fragrances and flavors.
Okay.
On the fragrance side, think complex compositions. They use a mix of aroma chemicals, natural essential oils, that sort of thing.
And where do these end up?
Oh, in a really surprising number of things you use every day.
Mhm.
Everything from personal wash items, soaps, face wash, hand wash, to, fine fragrances like perfumes, EDT, EDP, attar, even body care like
Mhm.
deodorants and lotions, home care products, fabric care, air care, pet care, men's grooming stuff, hygiene products,
So pretty much everywhere.
pretty much.
Uh-huh.
Imagine the specific scent of your favorite shampoo or that, like, fresh linen smell from your detergent. Chances are a company like Sacheerome might be behind it.
It's actually incredible to think their work touches our senses literally every single day in so many different ways. What about the flavors then? Where do their creations show up, on our plates or in our glasses?
The flavors are just as pervasive, really. You'll find Sacheerome's flavor creations in beverages, bakery items, sweets, dairy products,
Hmm.
and even more specialized things like health and nutrition products, oral care, shisha, meat products, dry flavors, seasonings. The list goes on.
Okay.
And what's particularly interesting here, and it's a key market trend they seem to be leaning into, is the rise in consumer preference for natural flavors.
Ah, right. People want that.
Exactly. They're actively catering to that demand, moving away from just purely synthetic options where they can.
So they have this really broad reach across our kitchens, bathrooms. How do they actually manage to produce all this stuff at scale? What are their, operational strengths?
Well, the prospectus highlights several key points there. For instance, they have a dedicated R&D team. And interestingly, it has a specific focus on the Middle East market, especially the Gulf Cooperation Council region.
Oh, interesting. Tailoring it.
Yeah, tailoring scents and pastes for that specific demand. Their main manufacturing facilities are in the Okla industrial area in New Delhi.
Okay.
And the document describes a pretty meticulous, multi-stage manufacturing process for liquid, dry, and spray-dried products. Production orders, precise weighing, mixing, filtering, quality control sampling. Seems quite detailed.
Meticulous processes sound good, but are they actually, running efficiently? Are they maxing out what they have?
That's a great question.
Yeah.
And the prospectus suggests they're running at, well, pretty much full throttle. Yeah, they show impressively high capacity utilization rates at that Okla facility. It was nearly 99% back in September 2024 and over 87% for the whole fiscal year 2024.
Wow, that's high.
It is. And it's not just a number, right? It highlights a critical need for this new facility they want to build. It suggests their current operations are efficient, sure, but likely constrained. So this IPO-funded expansion isn't just about growth. It feels almost essential to keep up their momentum.
Makes sense.
They also mentioned leveraging extensive global sourcing knowledge and a big network to get raw materials at competitive rates. That's obviously crucial for keeping manufacturing efficient and deliveries on time.
And quality.
Yep. They mentioned adhering to rigorous global quality standards, things like the International Fragrance Association, IFRA, and European Commission standards.
Okay, that paints a compelling picture, operationally speaking. So how does all this translate to their financial health? What do the numbers actually say?
The numbers look pretty robust. They paint a picture of consistent financial health. For instance, their revenue from operations went up by a solid 20.72% in fiscal year 2024.
That's decent growth.
Yeah, hitting over 850 million rupees, up from around 700 million the year before. Their profit after tax margin, the PAT margin, also saw a healthy jump up to nearly 12.5% in FY24 from 8.5% in FY23.
Nice improvement.
Definitely. And we also see consistent growth in other key metrics like earnings per share, EPS, that climbed from about 2.79 in FY22 to ELO 6.50 in FY24.
Right.
Similar positive trends for return on net worth and net asset value per share.
Okay.
And something that really stands out is their debt-to-equity ratio. Pre-issue, it's remarkably low at 0.03.
0.03. That is low.
Extremely low. It signals very little reliance on debt, which is generally seen as a strong indicator of financial stability. The prospectus even briefly mentions a peer company, Sacheerome Ltd, which suggests they see themselves positioned favorably in the industry.
Okay, here's where it gets really interesting for me. Why are they doing this now? Why is Sacheerome embarking on this fresh issue of shares? And how does this whole leap into the public market actually work for a company in India?
Right. Well, what's fascinating here is that this IPO is purely a fresh issue.
Meaning?
Meaning Sacheerome is issuing new equity shares, up to 6.1 million of them, each with a face value of 10 euros. But crucially, there's no offer for sale or OFS.
And why is that significant?
It's significant because it means the existing shareholders, like the founders or early investors, aren't selling their own shares to cash out. Instead, all the money raised from selling these new shares goes directly into the company's bank account.
Okay, so it's all going towards fueling their future growth.
Exactly. That's a powerful signal. It suggests the focus is squarely on expansion and development, not just providing an exit for current owners.
So what are they planning to use this money for specifically? Does the prospectus detail that?
Oh yes, very much so. The objects of the issue, as they call it, are laid out quite clearly. A substantial chunk of the funds is earmarked for setting up a brand new cutting-edge manufacturing facility. This one's planned for Uttar Pradesh.
A whole new factory.
A whole new factory. The estimated cost for this project is pretty significant, over 1.8 billion rupees in total. And they plan to use more than 560 million rupees directly from these IPO proceeds to fund it.
Wow. What does that cover?
Covers everything, basically. Land acquisition, building construction, electrical work, furniture, new plant, and machinery. They've even listed specific vendors they plan to work with for different parts, like Ms. Nav and Techno Projects for the boundary wall, Ms. Harcomp Airflex for MEP work, and Mrs. Handa and Chopra for furniture. It indicates a pretty well-defined plan.
And when do they expect this new facility to be up and running?
The timeline mentioned is for commercial operations to kick off in January 2026.
Okay, so that's a clear, concrete expansion plan. Does the DRHP mention any other ways they might use this capital? Maybe less obvious ones.
It does. There's a standard provision for general corporate purpose. The balance of the proceeds, up to 25% of the gross amount raised, can be used for this.
And what does that mean, practically?
It's basically a necessary cushion. It provides flexibility for things like future investments, meeting unforeseen needs or emergencies, covering salaries, and just general day-to-day business expenses, essential for ongoing operations and any strategic moves they might want to make.
Right, so it's not just about raising money for one big project. It's about funding a specific expansion and having some flexibility. But okay, how does someone like you, the listener, actually participate in an IPO like this in India? What's the practical side?
It's a structured process designed to bring companies like Sacheerome onto the public market. Their shares are proposed to be listed on the emerged platform of the National Stock Exchange of India, the NSE.
Emerge. Is that different from the main board?
Yeah, it's a platform specifically for small and medium-sized enterprises, SMEs. It has slightly different listing requirements and trading mechanisms.
Got it. And who manages this whole process?
There are key intermediaries involved. You have the book-running lead manager, or BRLM in this case. It's GYR Capital Advisors Private Limited. They sort of guide the company through the offering. And then there's the registrar to the issue, Link in Time India Private Limited, who handles all the application processing and allotment logistics.
Okay. And how is the price actually decided? Is it just a fixed price they announce?
No, it's determined through something called a book building process.
Book building.
Yeah. It means the final issue price isn't fixed up front. Instead, the company, in consultation with the BRLM, sets a price band to range, say 100 to 110 per share.
Okay.
This price band gets advertised at least 2 working days before the issue opens. Then, during the bidding period, investors submit bids saying how many shares they want and at what price within that band. The final price is determined based on the demand received across different price points.
How long do you have to bid?
The bid issue period typically lasts for a minimum of 3 and a maximum of 10 working days. That's the window for prospective bidders to get their applications in.
And who can actually bid? Is it just big institutions?
No, it's open to different categories. First, you have retail individual bidders, or IBs, as often everyday individual investors,
Right.
perhaps like you listening now.
Right.
They can apply for shares worth up to $200,000. And there's a convenient option using the UPI payment mechanism for applications up to $500,000. Importantly, IBs can change or even withdraw their bids right up until the bidding period closes.
Okay, so some flexibility for retail folks. Who else?
Then you have the qualified institutional buyers, or QIBs. These are the large players, mutual funds, insurance companies, foreign portfolio investors, etc. Up to 50% of the net issue can be allocated to them. Within that QIB portion, there's a specific subcategory called anchor investors. These are QIBs who commit to investing a significant amount, at least 2 crore, or 20 million rupees, before the issue even opens to the public.
Why do they do that?
It signals strong confidence in the IPO, helps build momentum, and provides some price stability early on. Once an anchor investor bids, though, they can't withdraw or lower their bid.
Gotcha. And the third group?
The third group is non-institutional bidders, or NIBs. This is basically everyone else who isn't a retail bidder or a QIB, could be high net worth individuals, corporations, etc. Their application amount has to be more than $200,000.
Okay, that makes sense. So once the bids are in and the issue closes, how quickly do things move? When would someone actually get their shares and be able to trade them?
They're aiming for what's called a T+3 timeline for allotment and listing.
T+3.
Yeah, meaning the allotment of shares should happen, and the shares should start trading on the exchange within 3 working days after the bid issue closing date. So it's a relatively quick turnaround these days.
That's good for investors.
It is. And one more thing to ensure smooth trading, especially on the Emerge platform, Sacheerome has entered into an agreement with a market maker.
A market maker.
Yeah. This entity agrees to provide buy and sell quotes, a two-way quote for Sacheerome's shares, for at least 75% of the trading time, for a minimum of 3 years after listing. This helps ensure there's usually someone willing to buy or sell, which provides liquidity and helps with price discovery.
Right, keeps the market flowing. Okay, this all sounds, well, promising. A clear path for growth, funding secured. But as you always say in these deep dives, investments come with risks. The prospectus must talk about those too. What are the key risks that you, the listener, should really be aware of, straight from Sacheerome's own disclosures?
Absolutely crucial point. And the prospectus doesn't mince words. It has a dedicated risk factors section with a very clear warning right up front, something like, investments in equity securities involve risk, and you shouldn't invest unless you can afford to lose all or part of your investment.
Standard, but important warning.
Very important. And they break down the risks into several categories, giving a surprisingly candid view.
So what are the risks specifically tied to this being their first time going public?
Well, the most obvious one is that before this listing, there's simply no established public market for Sacheerome's shares.
Right, no history.
Exactly. So there's no guarantee that trading will be active or sustained once it lists. And there's certainly no assurance about the price level at which the shares will actually trade. It could go up, down, or sideways. They also point out the possibility that the stock exchanges might impose preemptive surveillance measures, things called additional surveillance measure, ASM, or graded surveillance measures, GSM. These are tools exchanges use if a stock shows unusual price movement or volatility, and they can restrict trading in various ways.
Okay, that could impact liquidity.
It could. And another very direct disclosure, they mentioned that the book-running lead manager, GYR Capital Advisors, has a track record where some of the past IPOs they managed ended up trading below their issue price within 30 days of listing.
Ooh.
And in some cases, even after 180 days. Now, that doesn't mean this issue will do that, but it's a transparent disclosure about the BRLM's past performance that investors absolutely need to factor in.
That's a very significant point about the manager's track record. What about risks that are inherent to Sacheerome's actual business? Internal stuff.
Plenty there, too. Internally, their success really hinges on being able to anticipate trends in the fast-moving consumer goods, or FMCG, market. Predicting customer preferences for scents and flavors. That's tough to do consistently, right?
Yeah, tastes change fast.
They do. Another big one is customer concentration. The prospectus states that a significant chunk of their revenue, around 50% in the first half of fiscal year 2025, and about 45% in fiscal year 2024, comes from just 5 key customers.
Only 5. That sounds risky.
It's a vulnerability. If even one of those major clients decides to reduce their orders or change their strategy or switch suppliers, it could have a really disproportionate negative impact on Sacheerome's top line.
Definitely. What else?
Competition. They state the industry is highly fragmented, lots of small and medium-sized players competing. And importantly, they mention there are no stated significant entry barriers.
Meaning more competitors could easily jump in.
Potentially, yeah. Which could intensify price pressures and competition down the line. It seems like a bit of a cutthroat battleground.
Okay. And what about potential operational slip-ups or any maybe internal red flags the prospectus points out?
Well, they acknowledge standard operational risks, things like the potential for fraud or theft or maybe employee negligence, even with security measures in place. They mention having insurance, but note it might not fully cover the financial fallout from such events.
Standard business risks, I suppose.
Pretty standard.
Yeah.
They also disclose some past compliance issues, specifically inadvertent delays in filing Employee Provident Fund, EPF, returns for a few fiscal years, and also some delays in filing statutory forms with the Registrar of Companies, the ROC.
Is that serious?
They state that penalties were paid and no formal show cause notices have been received to date. So it seems resolved, but it's a disclosure point about past procedural lapses. Investors should note it.
Okay. Anything else internal?
A couple more significant ones. The promoters, the main individuals behind the company, have personally guaranteed certain loans taken by the company.
Meaning their personal assets are on the line?
Potentially, yes. If the company couldn't repay those specific loans, the lenders could go after the promoters personally. This could, theoretically, affect their ability to support the company financially in the future if they face personal financial strain due to these guarantees.
Right.
There's also the typical key person. Risk-heavy reliance on the knowledge and experience of the individual promoters and maybe a few key managers.
Standard for many growing companies.
True. And here's a big one related to the IPO funds. The estimated costs and fund requirements for that big new manufacturing facility. They have not been appraised by any independent bank or financial institution.
So it's just the company's own estimate.
Exactly. Investors are relying on the company's internal projections for the project cost and viability. Also, because the total issue size is below a certain threshold, 100 crore or 1 billion, no independent monitoring agency has been appointed to oversee how the IPO proceeds are actually used.
So less external validation on the plan and the spending.
Correct. It places more onus on trusting the company's management and their own due diligence.
Those are definitely considerable internal factors to weigh. What about risks from the outside world? Market conditions, regulations, stuff beyond their direct control.
Yeah, external risks are always a factor. Changes in Indian laws, rules, regulations, or even just new interpretations of existing ones could hit their business. Think about labor laws, environmental regulations, tax laws like GST or income tax.
Yeah.
Changes there could impact costs or operations.
Makes sense.
They're also exposed, like any company, to broader global factors: economic conditions, political instability, social unrest, interest rate hikes, inflation, foreign exchange volatility.
The big picture stuff.
Exactly. Natural disasters, health epidemics like COVID-19 was, geopolitical conflicts. All these things can affect stock markets in general, and potentially Sacheerome's business specifically.
And infrastructure in India.
They mentioned that too. India's physical infrastructure, ports, roads, electricity supply, communications is still developing. Any disruptions there could potentially impact their manufacturing or supply chain activities.
Okay. And finally, for you, the investor.
A practical point. If you invest and later sell the shares at a profit, you, as the investor, might be subject to Indian taxes on those capital gains. Something to keep in mind.
Right. Good practical point. Wow. This deep dive has really unpacked Sacheerome's ambitious leap to go public. We've seen a growing company clearly doing well in its niche with these big plans for expansion funded by this IPO.
Yeah.
And the draft red herring prospectus, as we've explored, gives this incredible window, not just into the opportunity, the growth story, but also very candidly into the inherent risks potential investors absolutely must think about.
It absolutely does. It just reinforces the idea that understanding these details, really getting into the weeds from the core business and the financials to the specific risks they themselves point out in the DRHP, It's just essential for making informed decisions. It's about moving beyond just the headlines or the marketing pitch to really try and grasp the underlying realities of a company before you consider putting your hard-earned money into it.
Well said. And this whole discussion raises an important question, I think, for you, the listener. As the global economy keeps shifting and evolving, how might the success or even the challenges of companies like Sacheerome, these businesses underpinning so many everyday products, how might that impact the broader consumer landscape and maybe even investment trends, especially in emerging markets like India? Something to think about.
Definitely food for thought.
Thank you for joining us on this deep dive today. Keep digging into the details of the world around you.